Good morning, guys, here on Monday. Twitter, what have they been up to for the past 3 to 4 days? We will have a look. As always, do your own due diligence and yeah, follow these guys that I follow here on Twitter. I think they have some amazing content and some different views on the market, bullish, bearish, neutral. It's good to have a more wide-looking uh, input from the people so you can make your own conclusion. Let's get straight into business here with Jake. Again, this is the TNX. So this is the 10-year Treasury yield. And again, looking into, he has this head and shoulders in the making. And what he's saying is that, excuse me, do like this so you can see it on the screen. TNX here, still watching to see if this head and shoulders plays out on the 10-year. If so, the markets are likely in for some short-term pain. What he means is that right shoulder in the making should and could go all the way up to closing this gap here and then to roll over. So we could be in for some shorter term rises here in the 10-year Treasury yield note, and then if it happens, we will roll over that at that point in time. Let's see if that is the case. Again, Jake here with SPX. This is okay, sure. You can see here he has this parallel or resistance zone here, getting rejected here. When is this? This is Friday. Okay, so it got rejected on last Friday, the week closed there. But also look at the massive run up. We had 1, 2, 3, 4, 5, 6, 7, 8 green days in a row. I think it were due for a pullback. Also, you have some horizontal levels here. So yeah, a lot of gaps in the chart right now. So maybe they will get closed in the pullback down here. Let's see. Let's see. Jake here again. Apple, same thing. Parallel resistance zone here, channel here, getting rejected here on Friday. So, but again, 1, 2, 3, 4, 5, 6, 7, 8, roughly 10 days of big green candles. It's due for a rest here. That is for sure. Strong. Grady, silver has broken out above the blue line and is backtesting. SILJ is lagging severely. The chart has red positive divergence, just like before the two previous moves back in 2016 and 20. And it's now back at the black line, which should be a big support. Clearly, this is SILJ against SLB, so against silver, more or less. Major triangle here breaking down, coming into the March 2020 lows, which should be a place where you will see a bounce. How big? I don't know, but that's a major crash low, and we should see a decent bounce here. SLV here again, bullish consolidation above his blue triangle here. That's beautiful. Yeah, that is the SILJ here again, breaking down from that blue wedge here, and now we very often are going in for a back test. So hopefully it will be a false breakdown, but again, we have to wait and see what is happening. But definitely noteworthy that we are here at these lows in SILJ divided by the SLV. Very interesting one to follow. Jake again here with the QQQ. So that is the tech sector Nasdaq textbook support resistance flip after the recent trend zone on Thursday. So again, resistance parallel zone here, and now we are breaking out, retesting, confirming it, and now it's turned bullish. So the tech sector here looks very strong. But I will keep in mind, this run up here is just massive here. So I wouldn't expect this to blast higher. Again, my take would be to have some sort of bullish consolidation above here, and then we can eventually go higher. That is just my take, but we'll have to wait and see. But definitely a strong move up, back testing, and then a great Friday for the tech sector. That is for sure. Jake again. Oh, many Jake charts here. Tesla, inverted head and shoulders. Looks very well defined with the symmetry and all that. So I think that is definitely the case. And this should be a big daily inverted head and shoulders in the making. And we also have a gap here. So I think when and if we break, we will close the gap, retest the neckline, and then we should go higher on Tesla. That is definitely a possibility given that setup. Grady, once again, silver energy is building. Not the time to take your eyes off the ball. Check the quarterly candle forming so far. Are you watching this historical moment in time? Again, you've seen this many times. The big 50-year long cup and handle, which will take some time to play out. But again, this is as bullish as it gets, and you just need to have time on your side really to before silver will go higher. And yes, I firmly believe that is the case. I cannot see any reasoning why not to. Also given here, drawing a trend line down here over these highs, you have a breakout at roughly 25.26. Getting above there should mean that we are starting to climb the handle and getting to the all-time highs within, I don't know, 12, 18 months, maybe, depending on how fast it goes, but looks fantastic. Silver. This is some of my charting here. I wanted to add in. So this is the TNX. The 40-year bond market ended with a big blow off here in this case. Here shown in the TNX chart. Time has now changed and time has now changed and low rates is now a thing of the past. And just a hat tip to the market sniper because he called that major blow off very, very early in 2020. And yeah, he was on point on that one. You can clearly see here, long-term trend line going back 40 years. And the March 2020 madness here, major move up, and now we're above, meaning rates are going higher, means higher highs and higher lows, meaning longer term we will have higher and higher rates. Unless they do yield curve, some sort of yield curve control, obviously, where they just like Japan, but again, that will just make gold and silver go absolutely bananas. So fair enough. Gold here, 1 monthly here. What is gold tracking in the long term? It's very simple. It's destruction of your purchasing power caused by excessive money printing and government spending. Don't be fooled by anyone tells you otherwise. Again, this is my chart going back to 50 years more or less, 1971, and you can see gold here in orange or in golden, and you have the inverted Dixie divided by inflation. So you can see here how well that it actually is tracking. These two are related to each other over a 50-year long span. So yeah, that is gold, and that is what this gold is doing. It is protecting your purchasing power. Uranium spot price divided by oil. I just found this one interesting. You have this trend line here, and right now uranium spot price is pounding on that trend line. I do, however, believe that this will drop in favor of oil. Not saying that spot price will crash or go down, but I think oil is in for a low here at roughly 74, 73 dollar level for the USD WTI. So, but still, when it breaks here, then I think you have. When I don't think it does now here, it needs one more go, but still, uranium spot price should outperform oil. This is the 15-year long trend line. So. Rashad here with the dollar index futures retracted 50% of the declining from September 26th, 2022, all the way down here to its recent low in July 2022, and formed the double top with Federal Reserve largely done with the rate hikes, and the U.S. credit rating outlook placed on negative dollar has moved more downside than upside. So yeah, again, these are the long-term dollar play. For now, this move here, shorter term at least, is very, very bullish, and we're getting a bit of a retrace here. So we will see how low it goes, but definitely the trend for now is that we are now in more of a downwards long-term for the dollar, and I do think that we are going into a tad above 100, maybe 102, to test these highs and these breakout lines right here. So I do think that short term, at least, we have some more downwards for the dollar, especially given the down rating, after the Friday close for the U.S. economy. Trend spider here. From failed moves often come fast moves in the opposite direction. I agree. That's also what I've been trying to say. If you have a false breakdown of a falling wedge, then you often get a snapback above the upper trend line, and then you buy into the first pullback. So that is the same thing that he means here. False breakdown causes big moves in the opposite direction. Why? Because shorts needs to cover. That is just the name of the game. Same as over here, right? Fake out, boom, all the way down. So this is the Russell, I think, yeah, and we could be in for a move up here if this is a false breakdown. However, I can see the lows here might be aligned perfectly, so maybe it's not a false breakdown, but still the charting is what he's saying is very something that you should you should look at very, very often these false breakouts to either direction. So great charting by Trent Spider there. This is me again, Bannerman on a Renko chart. On my Bannerman has barely started and it's at the gates as we speak. What I'm meaning is that this is on a Renko, so quite different from a normal candlestick. And the trend line starting here, 2007, all the way down, connection there. You can see we have a parallel one right here. And now we have the March 2020 move up here, and then bullish consolidation here. And when and if we break this trend line right there, Bannerman is in for a big move, a big move by looking at Renko only. So no noise, no time dimension in the chart. Bannerman could be in for something funny. Well, that's different. The SPY here again, what he's pointing to is lower lows and lower highs all the way down now. And now we have made that higher low for now. Again, this move here is very, very strong. So I would be careful that this could be a false breakout. However, for now, it is a higher low and very, very strong. Volume also a bit above the past 2-3 trading days, but still. And you are above this volume node over here. And the same thing here, you can see where we bounced at that volume node down here. So we are above some major support right now, which should help the SPY in the near term, long term. Oh, excuse me. Again here, this is stage analysis, market breadth, percentage of stocks above their 50, 150 and 200-day moving averages combined has been posted to members. And what he's saying is that, this is overall stocks here that is above these moving averages, and that looks very, very grim. And what it tells me, and I think you know that as well, is just that there are 7 stocks right now, more or less, that is keeping up the entire US market, especially the tech sector. Facebook, Google, and all these stocks, and Nvidia, but all the others is just struggling big time. So that is a very good visual view on that perspective. Last one, but not least, Tavi here. The growing gap between gold and mining companies is about to gain significant as the precious metal gears up to a major breakout, likely marking the beginning of a new long-term cycle for precious metals. Although mining companies are complex, capital-intensive businesses, what he means is that gold is at the same as it were back in 2020. However, oil and all other costs like machinery, working, salaries, all that good stuff has just went up like 50, 100% even. So that's why they are not earning as much. What they dig out of the ground is still the same, but their input is just so high. That is why the gold miners is underperforming, and they need the gold price to starting to close that earnings gap again. If we are indeed on the verge of a secular move in gold prices, miners are arguably one of the most undervalued companies in the financial markets today. I completely agree. In an environment where inflation remains high, then historically standards and hard assets excel, these stocks have the potential to yield significant returns and possibly become multi-baggers. Yeah, and I do agree. Also, if you look at First Majestic, also at a very, very big support right now in a falling wedge. Same thing as 2016. Hopefully it breaks to the upside. But it just looks and shows you how much of a gap there is here between the gold and gold miners. And here you have the GDX divided by GLD, major support here. And very interesting times to see if we can have a big spike here in the miners. It is probably one of the most hated sectors at the moment, and that is always a good sign. People just hate it. Me too, also, because it hasn't been it hasn't done what I've been thought it would do. It just keeps on waiting. So great visuals there by Tavi. Anyways, that is all I had for Twitter today and what I have seen in the markets. Again, follow these accounts. I find them very valuable. Have a great one, guys, and we will definitely see you in the next one. Cheers. Bye.